Welcome back to Investing Talk Podcast.
Today is going to be an interesting one. We're looking at a stock that I think the market has just fundamentally misunderstood for a while now.
Misunderstood how? Because, we're talking about MP Materials. Most people know this name. It's the rare earth miner, right? Out in the California desert.
Right.
It's been a retail favorite, a meme stock at times. I feel like we all know this story. They dig up dirt, sell it to China. What's misunderstood?
See, that's exactly it. That is the version 1.0 view. And if you're still thinking about them that way, you are missing, well, one of the biggest industrial shifts happening right now.
Okay.
As of, January 2026, MP Materials isn't just a mining company anymore.
So what are they?
They're becoming a piece of critical national infrastructure. We are talking about the only vertically integrated mine-to-magnet producer in the entire Western Hemisphere.
And the government's noticed?
The government has more than noticed. They've realized that if this company fails, the American military supply chain literally breaks.
That's a huge statement. The supply chain breaks.
It's not hyperbole. The Department of Defense has stepped in, and we have some game-changing news from mid-January on this, to basically turn this company into a fortress. They've put a floor under the stock that fundamentally changes the risk.
Okay, so the hook here is this isn't a commodity play. It's a national security play.
Exactly.
I like it. Before we get into the numbers, though, and I really do want to tear into their earnings because they look messy, just a quick reminder for everyone listening. As usual, before we start, subscribe, like, and comment to this video to support the show.
Yeah, it really helps us out.
It does. All right, let's pivot to the fundamentals. Let's strip away the national security flag for a minute and just look at it as a business. Because I'm looking at the Q3 2025 earnings, and if I'm being the skeptic here, this looks ugly.
On the surface, yeah, it's not pretty.
It's worse than not pretty. Revenue is, what, $53.6 million? That is down 15% year over year. And the bottom line, net margins are negative 50.5%. For every dollar they bring in, they are lighting 50 cents on fire. Yeah. In any other sector, I'd be telling people to run.
And you'd be right if this were, say, a software company. But you have to look at why the revenue is down.
Yeah.
It's not because demand disappeared. It's a strategic choice.
Strategic choice to make less money. Walk me through that.
Okay, so historically, MP mined the rock, concentrated it, and then shipped that concentrate to China for all the refining.
Right, that's where the money came from.
Exactly. But the whole point of this new mission is to stop relying on China. So what do? They stop selling the concentrate. They're basically hoarding it.
They're stockpiling their own material.
Yes. They're holding it back so they can process it themselves in their own brand new refineries. So that revenue dip isn't a lack of demand. It's a deferral of sales. They're betting the refined product will be worth way more.
Okay, that context helps. It makes the revenue drop more understandable. And I should say, even with that, they still beat expectations.
They did.
The street was bracing for a total bloodbath. EPS came in at negative 10 cents, but analysts were expecting negative 15, maybe negative 17.
Right, a less bad quarter than feared. But the real signal, the number to look at, was production. In the middle of all this transition, they hit a record for NdPr oxide production, 721 metric tons.
Okay, for anyone listening who doesn't have a periodic table handy, NdPr, neodymium, praseodymium, why is that specific chemical so important?
That is the magic dust. It's the key ingredient for modern technology. You cannot make a high-performance permanent magnet without it.
And these magnets are in what?
Everything.
Pretty much everything that matters. Every EV motor, every wind turbine, and crucially, the guidance systems and actuators in military drones and fighter jets.
So when they say they produce 721 tons, that's the raw ingredient for, well, the entire modern economy.
Precisely. And proving they can refine it at scale in the U.S. is the really hard part. China has owned this step for 30 years, so MP doing it in California, that's the inflection point everyone's watching. And management is guiding for profitability soon, right?
Q4 2025. We should get those numbers any day now. So the whole thesis is 2025 was the year of pain, of spending and building. 2026 is the payoff.
But growth costs money, and they are burning cash, which brings us to, I think, the wildest part of this story, the bank account.
The war chest.
Yeah, because usually a miner losing money is a bankruptcy risk, but MP just got $1 billion.
$1 billion in a financing commitment. And look at who wrote the check.
JP Morgan and Goldman Sachs.
Right. These aren't VCs gambling on a startup. These are the two biggest, most conservative banks on Wall Street. That signals a massive level of, due diligence from institutions.
But even bigger than Wall Street is Uncle Sam. We teased the DoD news. Break down this deal for me because it sounds unprecedented.
It is historic.
Yeah.
The U.S. government, through the Department of Defense, made a $400 million equity investment.
Hang on. Equity. Not a grant or a loan.
They bought stock. The U.S. government is now the largest shareholder in MP Materials.
Yeah.
And then on top of that, they threw in another $150 million loan.
That basically screams too big to fail. If the Pentagon owns a chunk of your company, they're probably not going to let you go under.
You'd think not.
But there's a detail in that contract that I think is the ultimate safety net here, the price floor.
Oh, this is the cheat code for investing in this stock.
Explain it, because usually if I buy a copper miner, I'm at the mercy of copper prices. If the commodity crashes, my stock gets crushed.
Right. And rare earths are notoriously volatile. China has a history of flooding the market with cheap product just to drive Western competitors out of business.
It's their classic playbook.
Exactly. But the DoD just broke that playbook. They signed a 10-year offtake agreement. But it's not just a promise to buy. It includes a price floor of $110 per kilogram for that NdPr oxide.
$110 a kilo.
Yeah.
Guaranteed.
Think about what that means. Even if the global price crashes to $50 or $60 because of Chinese manipulation, MP can sell its product to the U.S. military for $110.
It's a taxpayer-funded insurance policy.
It guarantees their revenue baseline for a decade. It almost completely removes that downside commodity risk. I don't know of any other publicly traded miner that has that kind of safety net.
It changes the whole valuation model. So, okay, we've got the government moat, the unique asset at Mountain Pass, but they aren't stopping there, right?
No, and this is the mine-to-magnet part. So right now they mine the rock in California. Soon they'll ship that refined oxide to Fort Worth, Texas.
The new facility.
The Independence facility is coming online this year, 2026. It's a factory that will turn the oxide powder into finished high-performance magnets. General Motors has already signed up to be a customer.
So they control the whole chain, dig the hole, refine the rock, build the magnet, ship it to GM. No China at any step.
Not a single step.
Okay, that definitely justifies a premium. But let's see if the market actually agrees. Time to pivot to the technicals. Let's look at the chart.
It's been absolute rocket fuel.
It really has. I mean, if you zoom out, this stock is up 229% over the past year.
Yeah.
Just parabolic. And just in the last month alone, January 2026, it's up another 30%.
We're trading around that $68, $69 level as we speak.
And what's significant is that it's bucking the trend. Most mining stocks are flat, maybe down. This is an MP-specific story.
Absolutely.
And from a technical standpoint, we just saw a huge breakout. There was this stubborn resistance level right at $66. The stock just smashed right through it.
And we've seen intraday highs touching almost $70.
Right. I saw wicks up to $69.50, even $70.90 on some days. And the structure is just, it's textbook. Higher highs, higher lows ever since the start of the year.
That's the definition of an uptrend. Every dip just gets bought immediately.
But it's the volume that confirms it, right? Price can sometimes lie, but volume doesn't.
Exactly. And on the big up days, especially right around that DoD announcement, we saw volume spike to 11, even 14 million shares. The average is way, way lower.
So this isn't just retail traders on Reddit getting excited.
No way. That is institutional accumulation. That kind of volume means the big funds, the pension systems, they are chasing this breakout. They have to get exposure to this theme.
And MP is really the only game in town for it.
It's the only liquid way to play it.
Okay, so the chart looks fantastic. Let's pivot and look at what the market is actually saying. Let's dig into the sentiment.
Well, if you look at the quantitative scores, the weighted sentiment right now is strongly bullish.
I saw that. Almost every single major news item, from the DoD deal to the analyst upgrades, it's all green. It's hard to find a bearish headline.
It really is. William Blair just initiated with an outperform, and Barron's, which is usually pretty conservative, they called it a perfect buy.
And the price targets from Wall Street are reflecting that. The consensus seems to be building around $79 or $80 a share.
So from where we are now, around 69, that's another 14 to 16% of upside still.
Which is a decent chunk left on the table after a run like this. But, and you knew there was a but coming.
I did.
We have a conflict, a divergence.
I know exactly where you're going. Insiders versus institutions.
Exactly. The institutions are buying. The New York State Teachers Retirement System upped their stake by almost 12%. Udine Wealth Management bought in. Big money is flowing in, but the insiders, the people with badges, are selling.
You're talking about the CEO, James Litinsky.
I am. He and the CFO have sold heavily. We're talking about $62.8 million in stocks sold in the last 90 days. Now, if this is about to become the most important industrial company in the hemisphere, why is the CEO dumping over $60 million worth of shares?
It's a fair question, but I think you need context.
Yeah.
The stock is up over 200% in a year. If you're the CEO and most of your net worth is in one company, wouldn't you take some chips off the table?
I mean, maybe, but 60 million is a lot of chips.
It is, but it's likely just tax planning, diversification. He still owns a massive amount of stock. It's not like he sold everything. But I do agree, optically, it gives you a moment of pause.
It's a red flag. It doesn't kill the thesis, but it makes you wonder if he thinks the valuation is getting a little frothy, which is actually a perfect bridge. Let's talk about the bear case. Let's pivot to the risks.
Okay, let's look at the hurdles.
Risk number one is simple: execution. We are betting the entire farm on this mine-to-magnet story. But, making magnets is not easy.
It's incredibly difficult. This is high-precision manufacturing, not just digging rocks.
Right. The whole valuation depends on the Texas Independence facility working perfectly in 2026, and then the 10X facility in 2028. If they turn those factories on and the magnets aren't up to spec or they can't make enough of them, the whole thesis just breaks.
And their clients are demanding. They have a supply agreement with Apple. Apple has zero tolerance for quality control issues. You ship bad magnets to Apple, that contract is gone.
Gone. And your reputation is toast. It's one thing to mine rock. It's another thing to do precision manufacturing for iPhones. Very different skill set.
Very different. What's risk number two?
Valuation. The price of perfection. We said the stock is up, but let's look at the multiples. The price-to-sales ratio is 48.6.
Wow, that is high.
High. The industry average is 1.4. MP is trading at nearly 50 times revenue, and remember, they're still losing money. TTM EPS is negative 66 cents. You are paying a massive, massive premium for future growth.
Well, you're paying for the certainty of that government contract, I'd argue. But yes, you're right. The stock is priced for perfect execution. Any delay, any slip-up, and that multiple is going to contract fast.
And finally, risk number three is just speculation. A lot of this recent 30% jump in January was driven by rumors.
The Greenland stuff.
Yeah, people talking about MP buying assets in Greenland or some play in Venezuela's Orinoco Arc. If those rumors turn out to be nothing, which happens all the time, some of that froth is going to come right out of the stock price.
I agree. You can't buy the stock based on a Greenland rumor. You buy it for Mountain Pass and the Texas facility.
You have to filter out the noise. Okay, so speaking of focus, let's zoom out. Let's render a verdict.
Based on everything we've looked at, the government backstop, the chart, the whole story, I am giving this a bullish score of 9 out of 10.
9 out of 10. That's one of the highest scores we've given out recently.
It is. And here's the elevator pitch. MP Materials is no longer just a company. It is a national security asset. That is the key.
Yeah.
The government's $110 price floor puts a safety net under the revenue that no other miner on Earth has.
It de-risks the biggest variable in the whole sector.
Completely. And that transition to profitability is happening right now. Late 2025, early 2026. That is the catalyst for the next leg up. If you believe in the anti-China supply chain theme, this is the only scaled way to play it.
So what's the time horizon? Not a day trade, I assume.
Oh no, this is a multi-year hold. We're talking 2026 to 2030. You need to hold this to see the Texas facility ramp up and that big 10X facility come online. That's when the real cash flow starts to gush.
So you buy it, you tuck it away, and you ignore the weekly noise.
Precisely.
I think that's a solid take. It's pretty rare to see the government essentially co-sign a stock like this. It really does change the math.
It changes everything.
All right, that's our look at MP Materials. If you want to track the magnet revolution and see if they can pull off this Texas expansion, hit that subscribe button. We'll be keeping an eye on it. Thanks for listening, and we'll catch you in the next one.
See you next time.